Welcome to Company Spotlight with Chris Temple, editor and publisher of the National Investor. Now in his fifth decade in the industry, Chris prides himself on his ability to find compelling investment opportunities in companies of all kinds, usually before the crowd. As he stresses at the National Investor, you can get information anywhere, but from Chris you get knowledge. And it is that knowledge he first gets from his research into companies, often visiting projects all over North and South America that he is privileged to pass on. Now, to learn about today's company in the spotlight, here's Chris.
Welcome in, folks. This is Chris Temple, editor and publisher of the National Investor. And today I'm going to be joined again by Martin Turenne. He's the CEO of FPX Nickel in just a moment. Now, some of you have already seen a discussion that Martin and I had back about 3 or so weeks ago. There was more an overview of battery metals, specifically of nickel generally, talking about the shortages for what everybody's grandiose plans are for electric vehicles and batteries and things like that. Today, we're going to talk more about FPX Nickel specifically. FPX, as I'll get to when I bring Martin disclosures, is one of the companies that I've recommended to my paid audience investor, and I think for good reason, because it's got one of the premier exploration projects in the world that could be supplying nickel in different forms to both the steel market, as well as, more importantly, for our present discussion, the battery market for many, many years to come. This all, of course, follows a theme that I've been hitting real hard for several months now, and that is our whole green energy build out, such as it is. It's only beginning in fits and starts because it's not being done well, in my opinion, and not plowed. There's other times that we can talk about things like that. There's other resources on my website, including on my YouTube channel and the Money Show, both, where my prior conversation with Martin is concerned on all of the general aspects of battery metals and things like that. But look, we've got a mess on our hands. Sure, in some years to come, we're going to see a lot of new product come to the market, but between here and there, it's going to be interesting. And so I've kind of tried to stick only with the most compelling stories, where regardless of the ups and downs that we have in the near term, I think that there are some great chances down the road for these types of companies to bring product to market and do well for all of us as shareholders. So with that, and a quick reminder here, as you just saw on the screen, of my green manual that I put out late last year. If you've not got a copy of it before, drop me a line and I'll make sure you get that. But I want to get right into subject at hand today, and that is FPX Nickel specifically. And once again, bring on my friend Martin Turenne, who's CEO. Martin, thanks for joining us again today.
Hey, Chris, it's great to see you and great to have the chance to speak with the audience again.
Well, one of the things, and we were talking about this before we actually started recording, we're recording this on the 22nd, and of course, markets have been roiled by Russian troops going in to ostensibly pursue peacekeeping measures in a couple of these Ukrainian breakaway republics, and that's not the subject today that we're going to talk about. But what's interesting about that is the impact that this has had on a lot of the battery metals, on energy. Your stock is up nicely today. Platinum and palladium stocks are up, as well as the prices of the metals, et cetera. And of course, energy is as well. This is a story that doesn't really depend on what does or does not go on in Russia and Ukraine. We already talked the last time you and I spoke about the high level view of the global nickel market generally, and supply chains and battery metals and so forth. Today, we're going to get into the individual bona fides of FPX Nickel. Folks, for those of you that don't know or didn't watch the last time, FPX is publicly traded. They're on the Toronto Venture Exchange under the symbol FPX. And in the US here on the OTCQB, they're under the symbol FPOCF. Now, as I said a minute ago, and here I'll start with our disclosure first. FPX has previously been recommended by me to the paid members that we have at the National Investor. Subsequent to that, the company has engaged National Investor Publishing to help with copywriting, some efforts like what you're watching today to help them get their word out. So we want to make that very clear. I also personally am a shareholder of FPX Nickel. And from Martin's perspective with the company, here is their disclosure. And of course, the securities regulators always want any of us to let you know that we might be making forward-looking statements here. So there are things that we think we know. There are things that we know that we might try and extrapolate on. I believe we're heading in the same direction, but from time to time, things don't always you think that they will. So you've got to be cognizant of the fact that anything like this that's an exploration stage project does have risk. You're going to learn a lot about the story today and how they de-risk this project and why these exploration properties really the world over are very unique in the nature of the ore that they have potentially down the road if these things turn into mines. So Martin's going to get into that in just a second. But before we do that, let's back up a step or two. Been CEO of the company now for a while. A little bit about how you got involved with FPX Nickel, what led to the formation of the company, and specifically, and here's another quick slide we're going to put up that we're going to break down as we go along. What prompted you / the management of FPX to focus on this area of northern BC and up into that southern Yukon right there? What prompted you to do that?
Yeah, thanks, Chris. So FPX was founded by a gentleman by the name of Peter Bradshaw. He, to this day, is still the chairman of the company. The company was actually founded as a public company in 1996. It spent the first dozen or so years of its existence as a gold-focused exploration company. In the process of exploring for gold in BC, happened upon this nickel occurrence, which now underpins our flagship, which is the Descartes Nickel District in central British Columbia. And at that time, the project was optioned at that time to a very large US-based mining company, which I'm sure you're familiar with, Cliffs Natural Resources, or what's now known as Cleveland Cliffs, one of the largest iron ore producers in the world. This was at a time that Cliffs was looking to diversify its business and get into other commodities outside of iron ore. We were their sort of play on nickel. They came into the project in 2009. They executed the first drill program in the project history in 2010. And by 2013, they had delivered an economic study. They then fell on hard times financially. So the FPX team was able to buy the asset back from Cliffs for sort of pennies on the dollar and reconsolidate 100% ownership of the asset and move it forward. I've been involved with the company now for about 9 years. I have a background in accounting and finance. I was the chief financial officer for 3 years and have now been the CEO for 6 years. Really came into the CEO role coincident with the transaction to buy the asset back from Cliffs. Spent a couple of years sort of in sort of cash preservation mode, if you will, through the bear market. But over the last several years have recommenced the kind of the aggressive exploration and advancement of our Baptiste project at Descartes, which now stands as the third largest undeveloped nickel deposit in the world, and it's something we think could ultimately underpin, a major source of nickel supply for North America.
Now, real quick, before I get to a more specific slide, I want to put this one back up here of this regional map, and all of those squares in there, Martin, are the different projects that you own. The Descartes one is the one at the bottom here, the square at the bottom. And before we get into its specifics and the nature of this rock that you've been working with and now have already had a lot of drilling success with, you've got you're going to be doing a scoping study. You're starting a scoping study. We're going to talk about that toward the end. But is there something about this trend as we're looking at it right here, screen, that a lot of this mineral is going to be the same as you trend to the northwest? Certainly not now, because of course the near-term focus is Descartes, but did you see something all along this area that interested you?
Yeah, so certainly it all started with what we found at Descartes there in surface samples of outcrops. So that's bedrock that comes right to surface that hosted this style of nickel mineralization that we have targeted. And while Cliffs was earning into our Descartes project and spending their money to advance that project, we spent a lot of time and effort elsewhere in BC, and as you mentioned, into the Yukon, following these trends of rocks. And we're talking about ultramafic assemblages here, which are found throughout British Columbia, that are prospective for this type of host rock. So these rocks are hosted in ultramafic settings. Not all ultramafic settings will contain this style of nickel mineralization. So there's definitely a process there of sort of separating the wheat from the chaff and honing in on the products that we do control. Certainly the focus of the company is on Descartes right now, but we do have a very attractive portfolio of, call them secondary projects, that at some point we think we'd be in a good position to potentially spin off or vend out to other parties to advance.
So with Descartes, and let's dive into that. You've got the Baptiste part of it, which you already have a big resource estimate on. You've done a PEA on it. We're going to dig into that a little bit. But what's really tantalizing to me, and the very first time you and I ever spoke about this some months back, what I had never really been familiar with is a kind of rock, and this is a tongue twister, folks. I still won't get it right. A Wawerite, how is that how you pronounce it?
Yeah, you got it, Chris. Good job.
Holy God, that was an accident. Practiced it and figured I'd get it wrong. But this is unique as we're going to go along, because this really takes out some of the potential refining steps, because it's more conducive to the kind of product really down the road that end users are going to want. Tell us a little bit about this and how the nickel is associated with the iron.
Yeah, so traditional Canadian nickel deposits, which really driven historically by Sudbury, which has kind of been the engine of North American nickel supply for many decades now. That nickel is hosted in sulfide bearing rock. So the nickel minerals are sulfide minerals. The nickel here is hosted in that mineral, as you mentioned there, a Wawerite, which is an alloy of nickel and iron. So the mineral forms in a host rock setting that is depleted in sulfur, and that's really key. If there was appreciable amount of sulfur here, the nickel would have formed as into the same type of mineral that you see in Sudbury. It's the absence of sulfur that has allowed for the formation of nickel in this unique form where it's bonded with iron. And that represents a couple of interesting opportunities. There's some really interesting physical properties to a Wawerite that make it really easy to recover metallurgically. Nickel is a very tough metal rather, in most mineral settings to recover efficiently with high recoveries at low cost. It's quite complicated to get out. Nickel has traditionally been known as the sort of devil's copper, and part of the reason for that is it's devilishly difficult to get out of the host rock. When it's present in the Wawerite form, where it's bonded with iron, as it is at our deposit, it's much easier to recover because that mineral is highly magnetic, and you can take it out of the rock you can take the nickel out of the rock using magnetic separators, which is a physical process of separation that doesn't involve any chemical reagents. So it has an environmental sort of benefit to it as well, in not being as chemically intensive as other nickel extraction. Also, the nickel that you produce here has very high nickel content in the product. This nickel mineral produces concentrates that grade something in the region of 60% nickel content, whereas typical nickel sulfide deposits only generate nickel concentrates in the range of 10 to 15%. So we can recover a much higher value product here. And one, again, that given the lack of sulfur in the host rock, that means that there's a lack of other what are called deleterious or penalty elements, sort of poisonous elements, things like arsenic, antimony, mercury, selenium, that are associated with sulfide deposits that are largely absent from our host rock, which means the product that we produce not only has very high nickel content, but very, very low content of penalty elements. And that makes it a higher value product to sell into end markets.
Sure, not to mention, as you've already alluded to, and we're going to get into this a little bit more, much easier to recover. I'm going to put the slide up now, Martin, from your corporate presentation that talks about some of the facts and figures from the 2020 PEA, preliminary economic assessment. Run us through that real quick and compare it, if you would, another slide in a second that does this as far as the low cost compared to other projects in the world. But what should we be looking at? Someone that searching exploration projects, they understand the nickel story and so forth. What are the couple of things on this PEA chart that jump out that we should be focused on?
Yeah, I mean, I would bring it back to what all junior mining companies are really designed to do, which is to try to discover and advance world-class tier one type mineral deposits, and ultimately be taken out by a major mining company that will advance that project into construction and production. And certainly what we demonstrated in this 2020 PEA is that Baptiste can indeed be considered world-class and something that is suitable for a large company, based on a few factors. One, location, BC is a tier one mining jurisdiction. Secondly, the scale of production. At the scale of production here, around 99 million pounds of nickel per annum. This would be one of the 10 largest nickel mines in the world. And it would also have a 35-year mine life. So the major miners love the ability to kind of get multiple exposure to multiple up cycles in commodity pricing. So the longer the mine life, the better. And also very importantly, low costs of production. So the operating costs here are modeled to be below $3 US a pound on what's called a C1 basis, which is a common measurement of OPEX in the base metals world. And so at below $3 a pound, this would be one of the, this would be within the bottom quartile of the cost curve for nickel production globally. So we're really checking all those boxes in terms of jurisdiction, scale, and cost profile to make this project of interest to the largest companies in the world.
Neat. And another one I'm putting up here real quick shows that global nickel market cost curve as you've discussed this, and that under $3 a pound by recent calculations. And for comparison, what was the bottom in nickel's price and what is it at right now as we're speaking?
Yeah, so over the last 15 years, you've had a wide range in the nickel price, as low as $3.60 a pound and as high as $24 a pound. So what our cost below $3 US a pound shows that we could have a profitable operation here throughout that nickel price cycle, which is very important given the volatility of metal markets generally, but of nickel specifically.
Well, and as we're recording this again on the 22nd of February, we're what, back into the low teens again?
Nickel price just over $11 a pound today.
Right, $11.
Yeah.
Okay.
Yeah.
So, and with a bright future, obviously, because of all of what's going to be needed. I want to move on now. You've got Baptiste, you've got a strong PEA. You've just announced you're going to start a scoping study, which is going to add to the economic case, for lack of a better term, of this. But in between, I want to talk about something else that really is a nice sweetener here. And that is that you guys last year nearby Baptiste on what's called the Van target, think you may have found something that might actually be bigger and a bit more high grade. How did you stumble across this, and what are your near-term plans for that?
Yeah, well, if you go back to the discovery history at Baptiste quickly here, that was identified as a drill target on the basis of some outcrop that was occurring over a very wide area, but very scattered. So we had some outcrop in one area showing good nickel mineralization, and in about a kilometer to the northwest, you could find more outcrop. And the thesis was that this was all connected in the subsurface. And that's in fact what was demonstrated by the drilling that we've done at Baptiste to take it to where it stands today. In the years after Baptiste was first drilled, an area around 6 kilometers north of Baptiste was cleared out for access. Basically, there's a lot of logging activity. A lot of forestry companies are active in this area, taking trees out of the area. And that allowed this area at the Van target to be exposed to us, for us to be able to take those same samples of outcrop. And what we found there was a much tighter cluster of outcropping rock. You didn't have to walk 1 kilometer between one rock and the next. You could make it, you could see that there was a very consistent outcrop over a larger area than what had initially been shown at Baptiste. So having demonstrated that with the PEA that Baptiste can be robust and economic on its own 2 feet, we undertook a drill program for the first time ever at that Van target last year. And the thesis has always been that it could host a nickel deposit that is potentially larger and or higher grade than Baptiste. And certainly the initial results of that maiden program from 2021 have definitely preserved that thesis, and it's something we'll continue to push forward on this year.
Nice, nice. And what we're going to get toward the end to one of your other slides that this is what your plans are overall for 2022. A couple of them will go into piecemeal, but I want to put another one up here, Baptiste, the green choice for nickel, and reiterate something I talked about on our prior video when we were talking about the global situation, ESG issues and things like this. There's a lot of so-called dirty nickel in the world. You and I kicked around a couple of articles, and 60 Minutes a while back had a story about Indonesia and how polluting to the environment, a big chunk of the entire globe's present nickel production, how dirty that really is. And because it's in a different kind of deposit that is dirtier, requires more to get it out and so forth. But there's this green choice for nickel, these different bars here, and of course with Baptiste on the far left, tell us basically what we're looking at for those that don't want to read the small print here, because I think that's
yeah, so most everyone will be familiar with cost curves, like where various projects or operations sit on the cost curve for production of a given commodity. And obviously you want to be as low on that curve as possible, and that drives economics. But there's a really growing focus on where these projects and these mining operations sit on the carbon curve. And that's kind of what this slide is getting at. What it's showing is that a lot of nickel production, particularly the 3 bars on the right here that come from laterite sources of nickel, tend to have high CO2 emissions associated with them. So you can see on this slide here that up to 69 tons of CO2 are emitted for every ton of nickel produced to produce a product called nickel pig iron, which is typically made in Indonesia and China. So that's a lot of CO2 for every ton of nickel produced. We're down at the other end of the scale. We forecast that we would produce around 2.5 tons of CO2 for every ton of nickel produced. We think there's an opportunity to move that potentially to net zero or even net negative under certain circumstances. If we're able to transition from a diesel fueled mining fleet to a zero carbon mining fleet, for example, hydrogen fueled mining fleets, I think will be a reality at some point this decade at this scale of operation. And then we also have an interesting opportunity to sequester carbon dioxide in our waste rock and in our tailings. And basically our rock has the unique property of hosting a mineral called brucite. When brucite is exposed to carbon dioxide, it actually seeks to stabilize itself in a reaction with CO2, and that locks the CO2 away in a new mineral form in perpetuity. So there's a way in which our tailings facility will act as a large carbon sink, and that could potentially push our net carbon footprint to negative carbon emissions for nickel production, which would be unheard of, obviously, for the nickel industry, and really factors very strongly into our conversations, both with large mining companies who are very focused on minimizing the carbon footprint of their own operations, as well as our discussions with battery makers and car makers who are seeking to put clean nickel into their vehicles, as opposed to some of the dirty nickel alternatives out there.
Well, for sure. And as you and I discussed, I think among other things on our prior video, that's a big deal. A lot of these corporations want to be able to have in their press releases where they get these things from. It all started back when with the movie Blood Diamond, and got people to understand that a lot of come from places that you'd rather not have people exploited in, little kids in muck and mud and chemicals and whatnot, working under lousy conditions. Now it's gone to battery metals, and this is all going to be the logical extension of this. So let's get now to the scoping study, which, correct me if I got the date wrong, was it the 1st of February you announced this, Martin?
That's correct. Yeah.
Okay. So the scoping study, in layman's terms, this is like the next layer of determining whether or not what you've drilled is going to be economical, because it's one thing to be able to say, okay, our grade of nickel in such and such a form is this number, but how easily can you get it out? How easily does it translate saleable and usable product, whether for steel or whether for a nickel product that would go into battery components. So up here, I want to put this one slide real quick. It's your horizontal one that shows the different steps of everything from the initial processing to where you get a nickel product that's saleable. And the one on the top is a lot shorter than the two on the bottoms. Explain to us what that thesis is, and then specifically what it is you're doing in your own scoping study right now.
Yeah, so the scoping study really takes off from that PEA that we put out in 2020 that we discussed earlier. And this scoping study very, very narrowly is looking at our opportunity to produce nickel in a form that's suitable for EV batteries. So the nickel that goes into an EV battery has to be in a specific form and has to meet very high purity requirements. That nickel product is called nickel sulfate, or NiSO4, as shown on the slide that you're referring to. And so the process of taking nickel from host rock and getting it to the purity and in the chemical form that's required in that nickel sulfate, or NiSO4, is typically a long process, very costly, typically involves multiple parties moving products between multiple different countries before it finally ends up in that EV battery. And you know, Tesla and some of the other car makers have been very public talking about their desire to see the mining industry sort of find innovative new ways of reducing the number of stages from the mine to the battery. Now that's easier said than done with, you know, with traditional, metal deposits. If there was an easier way to recover, let's say, nickel sulfide ore into a form that was suitable for batteries, you would think that some of the incumbent producers like Glencore and Vale and some of the others would have already cracked that nut already. There's probably a reason that they haven't already done that. The advantage that we see with our awareowite nickel ore that we described earlier is that it is novel to the nickel market. And given its high nickel content and the low level of impurities, as we described earlier, we believe we can diminish or reduce rather the number of stages between the mine and the battery, specifically by cutting out the smelting stage, which is typical for nickel sulfide mining. Because we don't have those deleterious elements, our product doesn't need to go into a smelter. And so it can get into that form of nickel sulfate, or NiSO4, much more quickly and effectively. And that's what this scoping study is going to be looking at, and really confirming to the market that, you know, this shorter path to nickel for batteries is very much embodied by our unique mineralization.
Wow. Yeah, and I think the easiest way, an analogy to use, correct me if I'm wrong, Martin, for people who are learning about this type of material, as I recently was for the first time. This is like the difference between free gold and gold that's mated with pyrite and arsenic and other things in ore. You're using just a simple physical process. In the case of this, it's magnetic, as you said. So you use magnets as opposed to gravity, to oversimplify it, to remove the pay, basically.
That's right. It's a good broad analogy to make. You know, people get very sort of focused on the grade of these deposits, whether we're talking about a gold deposit, a nickel deposit. But if they're in, if good grades are in metallurgically complex ores, there's a way in which those projects can be very easily made uneconomic because of how hard it is to take the target metal out of the host rock. In our case, we have relatively low grades, but the metallurgical simplicity means that we can be a low-cost producer of a very high-value product.
Right. Absolutely. And that's important to stress, folks. As we start to wind down, you know, you've already talked about different aspects of your story, you know, first world, large deposit, multi-generational, multi-cycle, maybe not a headline grabbing grade, but that's more than made up for, we think, by how easy it's going to be in relative terms to produce this. So I would suspect, and I know you can't divulge private things that are private and not public, but I would suspect you've probably got a few people knock at your door or looking over your shoulder with each step of the process, because as you and I talked before, there's going to be a scramble for car makers, battery makers, to figure out that when they're not getting as much help as they need from policymakers, they got to take matters into their own hands. And like Tesla did with Piedmont in the nickel space with their recent announcement that they want to get some future production from Talon up in Minnesota, you're going to start getting people that are going to want to tie up these things directly and have a direct umbilical cord to you. What can you tell us about, and again, I'm sure nothing specific, you have an actual strategy of how you're entertaining inquiries that might come?
Yeah, I mean, you're on the right track for sure, and there's only so much that we can kind of talk about in this type of forum. You know, we've never seen more interest in the project from strategic counterparties than we're seeing right now. You know, that includes sort of very large mining companies, but it also includes you know, participants in the downstream of the EV market and the associated battery market. And you know, for us, I think the way that we manage that is to say, listen, we're sort of cashed up for our 2022 work programs. We're sitting in a good position from a balance sheet standpoint with no debt, et cetera. Certainly happy to entertain that interest and those conversations. But, you know, when we look at our valuation in the peer group, you know, we think we need to re-rate by 2 to 3x just to get up to where, you know, other companies at this stage are trading at in the base metals world. So, you know, given the strong cash balance, given the ability to really control our destiny here, we can entertain those conversations. You know, if people are particularly interested in some form of, you know, a partnership or strategic investment, you know, those are conversations that we're, you know, open to. Again, can't say too much about that in any kind of specifics right now, sure. But we feel very comfortable that we can control our own destiny, but that at some point, you know, this project will be just, it'll be too strategic for a group to want to let it live in FPX's hands alone. And we see that the ultimate sort of exit for shareholders coming at that point.
Neat. Well, real quick as we close here, Martin, I'm putting up a slide on the screen. You alluded to your cash balance, which is toward the bottom here. You got about 14 million. So you're funded for everything you want to do this year and into next year, at least part way. The thing that I think is important to look at, folks, here, whenever you look at a share structure, look and see what management owns. They've got a nice chunk of this, other close people. You don't want to have a great story like this that would be too easy a target for somebody on the cheap. And so I think you guys have got some staying power. You've got the money to do what you want to do this year. And I'm excited, again, as I said at the outset, no matter what, rocky things, generally speaking, in the markets, we have to endure in a near term as we started what I believe is a cyclical bear market for stocks generally. But these are still compelling long-term stories. And, you should take a good look at this, folks. So, the FPX Nickel's website is on the screen here. Do some homework there. We took a little deeper, well, not a little deeper, a lot deeper dive into FPX specifically today than we did on the last talk, which was more general, but we still hardly did more than scratch the surface. There's a lot more details behind what Martin was talking about at their website. So make sure you take a look at that, spend some time there. If you have any questions, drop me a line. We'll get Martin again in a future date to answer whatever they are. And aside from that, Martin, you're with the scoping study underway, are you also doing any more drilling or greenfield work, one or the other or both this year, to try and expand the resources more? Or is it all now about honing in on the existing one?
Yeah, there's really a two-pronged approach to kind of strategic advancement of what we have at the Descartes district. The first part of it, I guess, is fundamental de-risking and advancement of Baptiste, the main deposit, ultimately through a preliminary feasibility study, which we would expect at some point in 2023. And then the other kind of strand, or the other prong of the approach, is really that exploration, exploiting that blue sky potential that we have demonstrated at Van, again, to try to figure out whether it could indeed host a deposit that is larger and or higher grade than Baptiste. So some exploration potential there that I think I know has our team really excited, but it won't allow us or it won't force us to kind of distract ourselves also from fundamental de-risking and advancement of Baptiste, which is a deposit that we think we could potentially get into first nickel production at some point this decade. And, given that growing kind of demand for nickel, we think that timing works out really well.
Nice. Super. Well, Martin, thanks again for this discussion today. It's good stuff, folks. Exciting stuff. And again, if you have any questions, drop me a line and we'll get them to Martin. Thanks again, Martin.
Thanks, Chris. Take care.
Thank you for joining us today on Company Spotlight with Chris Temple. Again, if you aren't already on his mailing list, make sure to write him at chris@nationalinvestor.com and ask to join.